What's up, everyone? It's Caddy with Money Investing. Welcome on board for another Market Open live stream here. So once again, thank you so much for joining. We are doing it a little bit earlier because inflation numbers come out in under 7 minutes. Just give me a thumbs up if you guys can see me and hear me. Just want to make sure that the audio and the video is working well. Maybe we should start doing polls on whether the live stream is going to have a lag or not, because I think that's more appropriate, because the last week and a half, the live streams have just been really terrible with the lagging issues. So hopefully, and again, I can't make any promises. I'm still trying to battle through what's going on. I need to figure out what's wrong. That's the first thing. And then I can start fixing it. So we'll see what happens throughout this live stream. But again, I'm here, and if not here, then I'll definitely be on Discord, kind of sharing my thoughts, going over some details, going over some information. But again, less than 7 minutes away for inflation, so that should be interesting. The markets here are down. We got the Nasdaq ETF QQQ down a little bit over 1.4%. We got the S&P 500 ETF down over 1.1%, and the Dow Jones dropping also over 1.1%, with Bitcoin pretty much giving away all of its gains from yesterday. So it's down a little bit over 6%, and Ethereum is also down over 4.5%, back just over 2,600 right now. So once again, thank you so much for joining. I really appreciate it. So loud and clear, Caddy. Answer, that's great. Live streaming lag down 7%. That's usually what's been happening, right? Every time we go through like a lag, we see like the markets drop. And of course, Amazon's up a little bit over 4.8% after their stock split announcement. So again, very, very interesting data coming out. And let me know if you guys can actually hear this, just so I can make sure that it's working well. So as soon as this kind of comes back from the commercial, I'll play it and let me know if you guys can hear it, and we should be all set. But this right here is going to be the inflation numbers. So don't forget, this is our Excel spreadsheet where all items CPI is sitting at 7.5%, core is sitting at 6% when you exclude for food and energy. And of course, energy overall has been going up a very much, up over 40% on a year-over-year basis. Electricity, utilities up over 10%, 23% respectively. So definitely pushing up very much here over the last year. And of course, not to mention that oil prices, even right now, are very high. We did see a little bit of a retreat here yesterday, so energy was down close to 12%. So Brent crude, we did drop down over 12%, 13% respectively, and right now we're starting to push back higher at the moment. So Brent is up a little bit over 3.7%, and crude is up over 3.78% at the moment. So we'll see where energy ends up. So again, let me know if you guys can hear this.
The flattening of the curve, major banks at this point, take a look, they don't do quite as well when that happens, obviously, but not huge moves, about market moves for where we see the Dow this morning.
Technology.
Yeah.
Meantime, Disney publicly opposing Florida's controversial Don't Say Gay bill. CEO Bob Chapek telling a shareholder meeting that.
All right, perfect. So we got about less than 4 minutes left for the inflation numbers to come out. And the yields, by the way, have been pushing up very much. We are back over 1.97. So that means bond prices are coming down and yields are pushing higher here ahead of inflation data. So that should be interesting. So Freddie, has CPI data come out? No, it's going to come out in about 4 minutes, less than 4 minutes. So it comes out at 8:30 a.m. Eastern. So that's in under 4 minutes. We should hear what the numbers are. So Chirag says, my Amazon calls will print today. That's great. That's awesome. Congrats on those. And by the way, I posted a new tutorial, fundamental analysis tutorial, going over 3 concepts and pretty much going over some of the most important stuff that is about share buybacks, stock splits, and dilution. So those are the 3 things that I wanted to cover in a lot of detail with examples. So it's a 21-minute tutorial that you guys can watch and get a good understanding with examples on what that means and how that actually relate to actual companies' fundamentals. What is a bullish catalyst? What's a bearish catalyst for specific companies? What type of stock splits? What types of buybacks and dilution? All that is covered in that video. So if you want to get access to that, feel free to watch that as well. So let me know what you guys think about CPI today. Where are we going to be? What are your thoughts? Over 8%, less than 8%, less than 7.5%, over 7.5%. What are you guys thinking? And again, less than 2.5 minutes left for CPI numbers to come out. So let me know what you guys think. The market's definitely pricing in some heavy increase in inflation. QQQ's obviously down over 1.45 with the SPY down over 1.12. And of course, the Dow Jones coming down. Raphael says 20%. That is crazy. By the way, I still haven't gone over the presentation. I'll go over that here shortly. European Central Bank, so ECB, kept interest rates steady. They did not see any increases or they did not raise rates, which in my opinion, I've got some thoughts about that. I'll share them when the time comes. But yeah, so I'll go over the presentation here. But Renee says 8.5%, James says 9%, YC says CPI to the moon. Boba says 7.1%. It will be higher than expectations. Over 8%, 7.75, 9 to 10%, close to 8.75%. Wow, damn, you guys are really expecting inflation to be really high right now. So, Sean, what time does CPI come out? In about 1 minute. In just about 1 minute is when CPI comes out. So what we're gonna do is we're gonna keep it over here. We'll take a look at the QQQ ETF over here on the 5-minute chart. Keep it over here, and then we'll keep the SPY just like that. Turn up the volume here. So we'll keep a close eye on these two ETFs, and then I'll also plug in our CNBC and we'll kind of listen in. And then I've also got the BLS open on another browser. As soon as the inflation numbers come out, then we will actually look into the report, the PDF report, to see where inflation is. So again, exciting stuff. We had February 24th is when Russia started invading Ukraine. That's when oil prices started going higher. Unfortunately, that's where commodity prices really saw a spike. So I'm expecting a little bit of a jump here in inflation because of those 4 or 5 days. But the real impact is going to be in March, right? Because March has really been a big jump in nickel prices, palladium, aluminum, all that stuff. So that should be, very much playing a big role for inflation. So, all right, there we go. It's 8:30 a.m. Eastern. Let's see how the markets react. And as soon as this goes live, we should have the numbers.
Welcome back to Squawk Box on CNBC. We're just seconds away from new CPI inflation data and initial jobless claims. We're about 15 seconds. The futures, we just looked at them anyway, down about 350 points on the Dow, just under 200 on the NASDAQ, and the 10-year and the 2-year, we looked at that a couple minutes ago. So hopefully you were watching. Rick Santelli standing by the CME in Chicago. Rick, the number.
Here we go.
Please.
Yes, the February release of CPI Consumer Price Index, of course, is going to be huge. The month-over-month number, as expected, up 0.8%. The high water mark here was actually up 0.9. So we have a bit of a reprieve there. If you strip out the all-important food and energy, exactly as expected, up 0.5. That also has had a high water mark of up 0.9. That was all the way back in April of last year. Now we get to the money numbers year over year. As expected, it's 7.9% for year-over-year inflation, following 7.5 that could get revised. 7.9, we go to the Wayback Machine to find a higher level of inflation. You're looking at 8.4% in June of 82 as your comp, and on the year-over-year ex-food and energy, known as core, exactly as expected, up 6.4%. Of course, 6% in the rearview mirror. That still may get revised. 6.4%, well, that comps to the same as the 6%. 1982, August of 82, when it was 7.1%. Now, on initial jobless claims, we're expecting a number right around 217,000. Well, 227,000 is...
All right, so 7.9% on total CPI, core sitting at 6.4 is what they mentioned. And you have to go back to 1984 to get the total CPI when it was at well over 8%. 8.4% is the comp from about 1984. So that's, roughly over 30 years, 40 years almost. And then core 1982 when it was sitting roughly over 7%. So total CPI at over 7.9, core sitting at 6.4. Well in line with the estimates, and we still have the NASDAQ down over 1.1%. We have the SPY down 89 basis points. The VIX here is up over 2.87%. Not a whole lot, but still pretty elevated from historical measures. So back over 33. Oil prices, so Brent and crude still up over 3% roughly. Ethereum and Bitcoin obviously have been selling off and giving up on most of those gains from yesterday. And let's take a look at the yields, and the yields are back over 1.95, although pulling back a little bit. So if you come over to the 1-minute chart, we did see a slight pullback here from 1.97. They have pulled back over the last 1 minute as the CPI numbers just came out. So pretty much in line with expectations. I think the market already priced that in pre-market, which is why we were selling off here. But yeah, right now we're starting to push back higher. Let's just tune in on the actual BLS numbers here. So I'm just going to go over to CPI and we'll go over to the PDF. Hopefully this has been updated. So not yet. This still shows January numbers. So what I'm going to do is I'm going to copy this link. I'm going to open it up in incognito and hopefully that works. So, all right, so PDF. All right, so here we go. February 2022. About an 80 basis points increase for the month of February 2022. So that was pretty much in line with expectations. But take a look at this. So CPI total sits at 7.9, core sits at 6.4. Absolutely no pace of any type of deceleration, right? So it just keeps going higher. It is going higher. So unfortunately, we are in a position where inflation is not showing any signs of slowing down. But the interesting thing here again to note is that we are comparing these numbers from February 2021, right? So if you look at on a year-over-year basis, we're lapping over some very weak comps right now. From February, from March, I expect that to happen in April, maybe even May, because we're going to be lapping over 4 or 5%. Core is going to be 4%, total is going to be 5%. Even as far as June and July, you can expect us to kind of stabilize a little bit over here. And that when it starts to ratchet up higher past September. So that's why towards the back half of the year, past September, October, November, December, is when CPI is going to be lapping over some very, very tough comps, right? That 7-8% CPI number that we're seeing right now is what it's going to be lapping over towards the back half of this year. So that's when there's a lot of estimates for inflation numbers to come back down. But then, of course, that also depends on monetary policy and what Fed decides to do from an inflation standpoint. But going over all the way down here to look at the month-over-month changes. So again, we're looking at the far right column, trying to understand what really moved on a month-over-month basis, because this is going to be January 2022 to February 2022, and this right here is going to be February. So right here, this column, I don't know if you guys can see that. Right here is going to be the year-over-year change, which of course for energy is still 25.6, 37.9, 43%, 38%, 38%. So that is going to be your energy prices right here. So fuel oil, motor fuel, all that stuff. So but far right corner, 2.3% increase. That was for fruits and vegetables. So that is pushing higher a little bit in February. And then we got 3.5% increase for energy. So that's your overall increase. And that's only in February, just with that 4 to 5 day period when commodity prices really started pushing higher, and 6.7%. Look at this. Again, this is what matters. 6.7% energy commodities. Fuel oil, 7.7%. These are your month-over-month changes, right? So month-over-month. And that's your fuel oil. When you look at motor fuel, right here, 6.7%. 6.6% for gasoline all types. Big jumps here on a month-over-month basis. Nothing really is jumping all that much. Maybe airline fares right here, 5.2%. So again, hopefully you guys can see that. Airline fares up over 5.2% on a month-over-month basis, now up over 12.7% on a year-over-year basis. Scroll down even further. This is again broken down a little bit better. So 4.1% here is, let's see, your fresh sweet rolls, coffee cakes, and donuts, up 4.1% on a month-over-month basis. But on a year-over-year basis, only up 4.1%. So nothing, doesn't really matter all that much. Actually, it's up a little bit over 11.2%, so a little bit higher than previously estimated. So going forward, 2.1%, breakfast sausages, 3%. This is going to be your ham. Some meats, poultry, eggs, all that stuff has obviously been pushing higher. This is a bigger breakdown on the food items. 5.7%, 6.8% for orange juice, so citrus, orange, fresh vegetables, all that stuff. But if you kind of look at it on a condensed basis, I think energy was once again the bigger move to the upside from an inflation standpoint, and we are pretty much in line with what the expectations were from Wall Street, right? 7.9% for total CPI, and core sitting at 6.4. So let's just take a quick look on the estimates from Econ Days. So CPI report right here, and let's take a look. Jobless claims, I don't really care about those, but again, the consensus was 70 basis points, a little bit higher than consensus estimates, 80 basis points. Expectation 7.9%, pretty much on the dot, 7.9%. And excluding food and energy, also on the dot. That's very unusual. That doesn't happen very often. that economists get those inflation numbers literally on point at 6.4. And when you exclude food energy, month over month change 50 basis points. So really, literally on point here with inflation data. But let's just quickly tune back into the markets and see how they are reacting to this news. And then we'll kind of switch over to our presentation here. So we are giving up on some of the pre-market here, small rally of close to over 78 basis points. We're starting to push back down. So QQQ is still down over 1.2%, and the SPY down over just about 98 basis points, close to 1%. Not as bad as what I had expected. I was expecting a much bigger drop here from the markets given the hotter inflation numbers, but not as bad. So all right, let's take a look at some of the comments here. So let's see. So check the VIX. So we already did volatility here, slightly higher, not bad, in line pretty much. Yes, so much bigger numbers in inflation are still yet to come. Like when April rolls around, when we hear about the March inflation numbers in April, that is going to be the bigger report. So this year, those two reports for inflation, and I would say the next couple FOMC meetings. So one we have next week, and then another one in May. We don't have anything in April for the Fed. Those are going to be super important. That's literally what's going to dictate the market environment for 2022, right? That's going to set the tone for 2022 moving forward. The next couple inflation reports, we just got one today, but April and May's inflation report, which is going to be for March and April, and the Fed's meeting for next week, which is March, and then the next one in May. Those are going to be some very important catalysts to look out for, because that's really what's going to dictate market sentiment moving forward. So, all right, let's just see. So, all right, let's just take a quick look on some of the presentation here. So, Russia-Ukraine talks fail with no progress on ceasefire, safe passage for civilians. By the way, somebody mentioned that my audio is cutting out. I just want to make sure that everything is still working well. Just give me a thumbs up if the audio and the video is working well. So, just give me a thumbs up and I will continue. I just want to make sure there's no lag and there's no issues with a live stream. All right, all good, perfect. Great. So talks between Russia and Ukraine's foreign minister in Turkey on Thursday appear to have ended in failure. So no ceasefire, with no progress made on establishing a ceasefire or safe passage for civilians trying to flee the besieged city of Mariupol. Basically, Cueva told news conference that the talks had been both easy and difficult. Easy because Minister Lavrov basically followed his traditional narratives about Ukraine, but difficult because I did my best to find a diplomatic solution to the humanitarian tragedy unfolding on the battleground and in the besieged cities. No progress had been made on Ukraine's proposal for the 24-hour ceasefire. Kuleba said, nor on the establishment of a corridor to and from Mariupol, both for citizens to flee the city and humanitarian aid to enter it. So unfortunately, there's no resolution there. This was a big catalyst, and this is something a little bit of a concern for myself, because European Central Bank holds interest rates steady as Russia-Ukraine conflict fuels stagflation fears. So stagflation, again, is an environment where inflation rate is high, growth slows down, and unemployment is also high. Right now in the US, we haven't really hit that stagflation phase because, yes, inflation's high, but the growth is still expected to be strong and unemployment is low, right? So we got those jobs numbers last Friday. We added over 600,000 jobs, unemployment sitting at 3.8%. So those are some good numbers. Those are literally pre-pandemic levels that we're hitting right now for unemployment. But the bigger problem, in my view, is inflation. And if ECB is not going to be raising rates, so consumer prices in the 19 countries that use the euro currency have climbed to record highs for 4 consecutive months, mostly recently hitting 5.8%. In February, the ECB is targeting 2% inflation over the medium term. And even in the Europe, it's at over 5.8%, which is decades high inflation. It is also feared that Ukraine conflict could cause further problems for supply chains already disrupted by the pandemic, negatively impacting economic growth alongside soaring oil and gas prices. That's a problem for Europe because 40% of their gas comes from Russia. And if there's an oil embargo on Russia, God knows what's going to happen to gas prices over there, right? Unfortunately, they're going to keep going higher. And in that sort of situation, you want to be ahead of the curve with interest rates, right? If you don't raise interest rates and you get into a situation where inflation gets out of hand, that is going to be a troubling situation. You're essentially delaying a short-term recession for a much bigger, deeper recession down the line, just because you don't want to hurt the growth in the short term. That's the way I personally see it, because interest rates, they do need to go up. In my view, they do need to go up, regardless of what fears we have in the short term. Even the Fed, 25 basis points, I've mentioned this before, isn't going to do anything. We need to go up to 50. We need to go up to 75 basis points almost immediately, because towards the back half of the year, we do expect inflation to lap over some very difficult comps. And at that point, we will be in a very good position if interest rates do go up in the first 6 months. If they don't, we're going to be in a much more difficult situation later this year. So Reuters polled in early March found the majority of economists expect the ECB to wait until the final few months of the year to raise interest rates. However, there is currently no consensus on the month that the central bank could bring an end to its asset purchase program. The European Central Bank on Thursday opted to keep interest rates steady, remaining cautious as it assesses the economic fallout from Russia's invasion of Ukraine, and the central bank's benchmark refinancing rate remains at 0%. Crazy. No major policy decision from the central bank's governing council was expected, but the market participants will closely be monitoring ECB President Christine Lagarde press conference at 1:30 p.m. Eastern, so she does speak later today. And UK adds Russian billionaires and Chelsea Football Club owner Roman Abramovich to sanctions list. This was a very interesting sort of news piece. So Russian oligarch Roman Abramovich, the outgoing owner of Chelsea FC, has been sanctioned. And unfortunately, there's not going to be any more sort of ticket sales for Chelsea Football Club, no away fans, no sort of merchandise sales as well. And that's like a pretty big sort of fine and sort of sanction on Roman Abramovich, who is the owner of Chelsea FC. So, you know, if you're part of the sort of like the football community, if you've been following sort of like the Premier League and stuff, you probably have heard of him and have seen him, because he's mostly on all Chelsea games, even though I don't like Chelsea at all, but something I keep up with. So here's what happens to Russian oligarchs' yachts after they're seized. So another interesting catalyst here: the sanctions against Russian oligarchs imposed by the European Union, the UK, the US, and other countries unleashed a wave of asset freezes across Europe. Officials impounded 213-foot yachts owned by Alexis Mordashov in Imperia, Italy, Igor, 280-foot yachts in French. So lots of sanctions is happening against people, obviously the oligarchs of Russia. But JD.com reported better than expected profit and revenue for its latest quarter. So they also reported numbers along with CrowdStrike. And CrowdStrike, I think, is up a little bit over 6%, 7%. But the China-based company also reported its slowest revenue growth since early 2020. Its stock slid more than 6.5%. This was a very similar price action to what we saw for Alibaba. Alibaba also dipped after the earnings, not these earnings, but the last ones that we looked at, because of slower revenue growth. And unfortunately, JD.com is kind of going over. Howard says, Chelsea is good. Why don't you like that? I'm a huge fan of theirs. Well, unfortunately, right now, I am a United fan, so I know United's not doing too well, but Chelsea is a great team, no doubt, but I'm just, I don't support them. CrowdStrike surged 12.5% pre-market trading after reporting better than expected quarterly profit and revenue. The cybersecurity, so they surged over 12.5%, and the cybersecurity company also issued an upbeat 2022 forecast and said it would strongly pursue market share as cybersecurity demand accelerates. So oil prices will likely decide whether stocks have found a bottom or not. So again, you know, it's been kind of like the trend here, so you guys know this. Yesterday was a very bullish day, as we had lots of green across the board for a lot of tech companies, consumer defensive, communication services, cyclical stocks, technology, software, financials, all that stuff. And the only sector that was down was energy, right? That was the only place where we actually saw red yesterday. But this right here is the year-to-date chart. So complete contrast, right? This is yesterday, this is year-to-date. So complete contrast, and you can notice how energy has been doing really well on a year-to-date basis. But this is what's going to really dictate where the stock market goes over the next couple quarters and pretty much remainder of 2022, because energy prices in general, oil prices, if they go higher, inflation expectations go higher, interest rates go higher, and that doesn't, is not a favorable environment for equity valuations in general for stock prices. So that is a bit of an issue there. This was another catalyst that I wanted to go over, which is actually very interesting, which actually came out yesterday, not yesterday, but on March 7th. Share buybacks on track for record amid market turbulence. So companies are using cash to repurchase their own shares at a record pace. And I think that makes sense, because some of these big companies that we have talked about, like Amazon, Google, Apple, Facebook, AMD, like they're trading, PayPal, they're trading at their lowest valuation. Some of them are, not all of them, but most of them are at their lowest possible valuations ever since they've been a public company. So Goldman now expects companies in the S&P 500 to authorize over $1 trillion worth of share repurchases this year. 1 trillion in 2022. That is a lot of them buying back their own shares. So that's always been a big catalyst, right? And this, by the way, again, I wanted to kind of reemphasize on this. I posted a video for our members going over stock splits, share buybacks, and dilution. So a tutorial, a 21-minute tutorial, kind of going over all of those things will help you guys really understand, how fundamentally this affects the company's valuation, the market cap, whether it's positive or a bearish catalyst, bullish or a bearish catalyst. So all that links going to be down in the description below. So why does Amazon want to be listed on the Dow? So it's not like Amazon would want to list on the Dow, but after the stock split, it makes it a good candidate for Amazon to be listed on the Dow, because it's one of the largest companies, in the world, in the U.S. It represents pretty much e-commerce, retail, even logistics to some extent. So it kind of covers a variety of industries. And up until now, it wasn't really part of the Dow because of its higher price, because Dow Jones is a price-weighted index. So if it were a part of Dow Jones, it would have really influenced where the Dow Jones went, right? So Amazon's price action would have influenced the Dow because it's a price-weighted index, right? So now that the price is going to come down to more of a reasonable $140, $150 level, it makes a lot of sense for the Dow to consider including Amazon. But it's gonna be interesting who they're gonna get rid of, because out of the 30 stocks that are in there, we know Salesforce got added last year, so CRM was added very soon, just recently. But then we've got American Express, Nike, Microsoft, Visa, JP Morgan, Cisco, Pfizer, Boeing, UNH. So there's a lot of really good companies. If it's going to be interesting, if Amazon were to come in, which company is going to be moving out of the Dow and it's going to be replacing Amazon. But going over here, the Nasdaq pulling right back down about 1.47%. The SPY is also down over 1.22%. Yesterday was a really green day. It was a very, very green day. So we saw a lot of momentum kicking in for the markets without a doubt. And again, I shared this chart, kind of like the lower highs and lower lows. So you'll notice that we're consistently in a downtrending channel. So yesterday's rally doesn't really mean anything in the sort of like a broader time frames. We are still consistently kind of in that bearish pattern. So Caddy observation on SPY, DI, IWM volume on sell was more even, though price went higher, but QQQ had good volume, unlike the rest, assuming Amazon news. So I mean the volume yesterday, let's take a quick look. So we'll just go over QQQs. Let's see, so 64 million, so a little bit lower than usual, than the average 10-day volume yesterday for the Qs. Usually it's about 84, 85 million, so a little bit lower volume for QQQs. But one thing I again wanted to mention is that there is a significant divergence here in terms of a bullish divergence forming for this NASDAQ ETF. So you'll notice that we are still making these higher lows for the RSI with a price that continues to make these lower lows, right? So there is some type of a positive divergence or a bullish divergence right now for QQQ. So that's something to keep in mind. And in my view, sure, it could come down even lower, and it's the pattern overall is very bearish, but there's also going to be a possibility for a reversal very soon. That's why I'm kind of dollar cost averaging consistently on some of the stocks that I really want to own at these cheap valuations. And I've pretty much been a buyer almost every red day so far that we've seen. And on top of that, we've also been selling call options and selling put options to take advantage of that volatility. But I think oil prices are really going to be a big driver here for equity valuations, for markets in general, and where we end up kind of trading. Because yesterday we saw a big drop in oil, 12%, and the market saw a big green day, right? Because this kind of lowers that future expectations for inflation, because this is a big driver for prices in general. So, all right. I know it's not, but I like the 10 billion buyback they announced after shareholder vote. Yes, so 10 billion, by the way, for Amazon is not a whole lot. And I know somebody mentioned about Amazon and whether it's a buying opportunity. So I wouldn't necessarily just go on this this sort of theme of share split and kind of like this buyback as a buying opportunity, as a catalyst, because sure, the market sees that psychologically as a big announcement, and the stock's up 4%. It was much higher before. It was up close to 6%, 7%. We got up to over $3,000 after hours yesterday. got up to as high as 3,085 before selling off. So it doesn't really do anything materially, nothing at all. And in terms of the buyback, it only helps the stock from a 0.7% standpoint, because that's how much they're buying back. That's how much supply they're taking away from the markets, right? Roughly about 3.6, 3.7 million shares. That's something that I shared with our Discord, kind of like the whole math behind the buybacks and how that sort of affects Amazon from a shares outstanding standpoint. So, so yeah, that's something to keep in mind. And let's see. So let's see. Google is NASDAQ. So yeah, Google is listed on the NASDAQ. It is a NASDAQ stock. Pretty big tech company, along with Amazon, Microsoft, some of those ones. All right, let's just quickly go over some individual companies. If there's any stocks you want me to go over, we can do that for the next maybe the next 15-20 minutes. And again, I don't want to jinx it, but you guys already can guess what's working well so far, so I'm not gonna say it. But I did disconnect all my devices, everything, literally nothing in my entire home is connected to the internet except for my laptop right now. So I'm sacrificing a lot right now. Literally off the grid except for my laptop at the moment, so that my laptop is the only one sucking out all the internet right now. So, all right, let's take a look at. So what do you think about the implications of the CPI numbers on the markets in general? So that's a great question, Sean. I think this is something that the markets were anticipating anyway. For the total CPI to be 7.9%, for core to be 6.4%. I think that was already priced in. I think it's no surprise that we all saw inflation numbers higher, and moving forward in April and March for the inflation numbers to be even more sort of higher, right, in general, because of how much oil prices have gone up in March and April. Now that being said, nobody likes higher prices, right? Nobody likes gas running up $4, $5, $6 per gallon. That's ridiculous, right? That's putting a burden on consumers, and 3 to 4%. So if you think about it logically, here we go. YouTube's giving me that error again. God damn it. All right, I do apologize in advance, by the way. If it drops, we'll just restart the stream here before the market opens, because we do have time. But as I was saying, nobody likes higher prices, right? So if inflation keeps going higher and prices go higher, people are going to end up with less disposable income, right? We're going to have less disposable income to spend on other things, because gas, utilities, those are some things that we need, right? Those are some things that we can't live without. So people spend more on necessities and needs versus things that people want, right? So discretionary items, like people are going to order less on Amazon. They're going to buy less sneakers on Nike. They're not going to buy the next iPhone, things like that. But they're going to rather spend on higher prices, which are on gasoline or utilities, all that stuff. So that, as a result, benefits utility companies and kind of like creates this sort of recessionary environment where utility companies, dividend companies, higher free cash flow companies, they tend to do well, and growth stocks that are discretionary stocks, they tend to kind of underperform. That's the environment that it creates. But at the same time, if interest rates go higher, if monetary policy is ahead of the curve and we push higher and inflation starts to curl back down, then it's going to be good for the markets in general, for growth stocks in general, because of the environment that we will be in, inflation starts to come back down. So that's kind of like my 2 cents, and it really kind of depends. 440 in Jersey, Kevin says, so 440 per gallon, which is again pretty high. So it really depends over the next couple of quarters and what the Fed decides to do next week. So March 16th is when the FOMC meeting is. Caddy's internet hates him. It does. I think it does. It really does. I don't know what it is. I need to first figure out what the problem is. Then I can solve it. First, I need to figure out what the issue is. All right, so we were going over some stocks, and we'll break down stocks till we can. Let's just go over Apple, and then I'll also take a look at an ETF somebody mentioned, which was so Mohammed says $5 per gallon in West Texas. That's really unfortunate. IGV, so we'll go over that as well. Then we'll go over Best Buy too. So Apple coming down here 1.6%. still making those lower highs and lower lows. So definitely been selling off. The pattern overall looks very, very weak. We got a perfect validation from that support at 155. Resistance 168. So we got tagged at that resistance and then now starting to sell off once again. And support level, again, is going to be sitting roughly at 155. I would be very interested sub 130, sub 125 for Apple. If it gets down there, great. If it doesn't, not a problem. It's just going to consolidate for a little bit. But I still need to kind of break down what they actually announced. They announced like a $429 iPhone SE, which should really, really help them grab more market share in places like India and possibly even China. Because especially India, I feel like that phone is going to do really well in my view. So new iPhone SE could help Apple grab bigger market share in China. Oh, literally, I didn't even read it. I just said it and then I read it. So Apple newly launched third generation iPhone SE may help the tech giant gain market share in important markets like China and India, according to Counterpoint Research. Okay, I literally didn't even read the article headline. But anyway, so that price point is very appealing, especially people here in India. I can tell you from my own experience, obviously pricing is a big sort of selling point, especially in an emerging market like India, where there's a lot of Android phones available for sub 300, sub 200, sub 400. But if Apple comes on and competes at that price point, oh man, it's game over because everybody wants to own Apple iPhones. It's just that pricing's always been an issue, over $900,000 per phone. But if they come out with a $429 phone, that's game over for all other Android phones. Especially they're going to be able to make a significant impact. Significant. Price at $429, powered by the A15 Bionic chip, along with products during the peak performance launch event. So February iPhone price at $200 can have a good offtake in regions like Africa, South America, parts of Asia, which are currently Android strongholds. Yeah, so it's a pretty big dominant Android market for Apple. So Shiv says CPU is next level at A15 at 3540K. Yeah, so that's also a big sort of catalyst for the company. So should add significant revenues. I'd be interested to learn more about the margins for those iPhones because higher priced iPhones, obviously the operating margin, cost of revenue, the gross margins are much higher. But for $429, I'd be interested because they're definitely going to be doing lower margins. They're not going to be able to get the same margins as they are for their actual iPhones selling in North America for $1,000. But I'd be interested to learn more about. Obviously, they don't report separately, but if they start selling in a lot of volume, then their overall margins will start to kind of come down a little bit. So that's something to keep in mind. But revenues should really catapult higher from this big catalyst. So Apple 155 support, that's going to be the level to watch. And let's see, let's just go over IGV. So whatever that ETF is, I don't know. So iShares Expanded Tech Software Sector ETF. Well, that's a mouthful. That's a lot of words. All right, so 1.6 million is the actual volume. We can take a look at what this ETF has. So let me just pull up maybe ETF.com. And we can take a look at what this actually has from like a holding standpoint. I'm assuming it's going to be all Microsoft, Google, AMD, some of those companies, because it's a software tech ETF. So it's going to be a little bit more concentrated in my view, but let's just take a quick look. So, all right, so top 10 holdings, we got Microsoft, Adobe, Intuit, Synopsys, Autodesk, ServiceNow, Activision, Blizzard, Palo Alto Networks. Microsoft's over 9% of their holdings, so that is quite a bit. But these 10 stocks kind of make up 50% of their actual portfolio. So I would not go for this personally. 43% expense ratio, number of holdings 129. So it's a very concentrated ETF with 43 basis points, pretty significant fees. So yeah, I mean, in my view, there's a lot better options out there that are more diversified for literally 1/10, not even 1/100th of the cost that you'd be spending on this ETF. So it's going to pretty much be mirroring all those tech names that you can also get exposure to somewhere else for literally very, very low fees. So I personally would not go after this one. All right. So when Amazon price is going to change to 150, 200 due to the split. So they're expected to close that in May, June, somewhere around those time frames, kind of very similar to Google. So that's when you can expect Amazon to also start trading around those levels. I'm super excited for options. Really, really excited to sell some covered cash secured puts on Amazon, and of course sell some covered calls as well for all the 20 shares that I will receive for every 1 share that I have of Amazon. So that's going to be super interesting to actually finally. I mean, the last split they did was before the dot-com bubble. Can you imagine the options chain is going to blow up for Amazon once they actually do the split? So I think the board finally realized that we need to do something to move this, or like at least get this going, because it's just been consolidating, right? It's our king of consolidation, Amazon. All right, let's just take a look at NEO. So I feel like a lot of people are asking for NEO. So NEO here, big rally yesterday, up over 12%, so back over $20. So it debuted Hong Kong homecoming secondary listing. And $19 is that support, right? So this right here is going to be that level to watch very closely for NEO. And right now we're just consolidating sideways, but overall it's just been a lower high and lower low pattern for the company. So, so that right there is going to be support. There's a lot of debuts coming up for the ET7, the newer models, especially later this year, and of course their expansion over in Europe and other parts of the world. So fundamentally, and of course they've got earnings coming up very soon. That should be another catalyst to look forward to, and I'm going to be interested to learn about when the company is going to turn the corner and become profitable. Right, that is super important to me, profitability, because that's going to give us a good estimate on the earnings yield, the price to earnings multiple. Price to sales right now trades at under 5, under 4. So I do think that I think that's very reasonable, considering that Tesla obviously trades at much higher multiples. But again, Tesla's not a comparison for NEO. But just a good observation as to how much Tesla's expanded its business and how well the deliveries have been over the last several years for Tesla. So if NEO can even get remotely close to that number over the next 3 to 5 years, then we can expect a big expansion in multiples for the company, considering they're able to grow their margins and turn profitable as Tesla has done over the next 3 to 5 years. So so that right there is going to be the overall take. And again, support level is going to stay put at $19. Big rally yesterday, but overall just very, very downtrending channel, unfortunately. Let's take a look at BBY, Best Buy, and then we'll take a look at CrowdStrike. So this right here, Best Buy, I heard about some news. I think they reported some very strong numbers. Big beat on earnings, a little bit of a miss on revenue. But let's just take a look at this stock. Wow, it's been all over the place, literally. Haven't been really following up with Best Buy all that much. Unfortunately, I don't know much about the company's fundamentals, revenues-wise, earnings-wise. But this right here seems to be a level where it's consistently getting rejected at close to 124, 125. So that is a very, very strong resistance for Best Buy. Support level is going to stay put at $95, $96. And if you come down over here to the valuation, it's trading at just over 10 times earnings, less than half times sales, just a little bit over 7 times free cash flow, and enterprise value to EBITDA over 6.4. So valuation is very, very low. I mean, the multiples are significantly low for the company. And then cash to debt, not the best. Company sitting on under $3 billion in cash, under $4 billion in debt. And then if you take a look at the shares outstanding, they've actually been going down. So that's good. The company's buying back their own shares. Share buybacks, again, very, very important when it comes to fundamental analysis. Kind of like that hidden red flag is dilution that, is super important when you're doing some analysis. But $95, I would just watch that level. It seems to be kind of validating that support very nicely over the last, I want to say, several months since December. It hasn't really broken down below 95. A couple times when the market entirely sold off. And then since it had a nice rally of 30+%, right now we're just consolidating sideways. So we'll keep a close eye. $95 support, 125 resistance here. So, all right. So Andre, hey Caddy, saw that Amazon note that Walgreens may get the boot from the Dow to make space. Would this worry you for Walgreens? Not really. Because again, this is all subjective, right? Just because a company is getting booted out of an index doesn't necessarily mean that it's a bad company, right? It just means that the Dow has requirements of 30 stocks to keep there. And if Amazon wants to obviously get in, and Amazon is one of my biggest positions anyway, so that would be like a bullish catalyst for Amazon. But I don't think it's going to be super bearish for Walgreens anyway. They have a plan of accelerating earnings over the next 3 to 5 years. Yes, in the short term, that stock is struggling. It is potentially going to keep struggling. But my main goal is not growth with Walgreens. I don't expect Walgreens to go up like 100, 200% over the next 3 to 5 years. If it does, great. That's like just cherry on top. But I'm mostly investing in that company for the dividends that I'm going to receive over the next several decades, right? Not just several years. My plan is to hold that company for a long term because it's a dividend aristocrat. It's going through a big shift. Similar to Intel, similar to Walgreens, those are some of the dividend stocks that I plan on just holding for the long term. Not expecting super intensive growth, but it's simply just expecting dividends, right? So again, with every stock, your expectations have to be different. It's not like every stock is going to be a 2x, a 5x, or a 10x. Some stocks are geared towards more growth. Some are geared more towards dividends. You just have to kind of set those expectations well. And even if Walgreens sells off sub 45, sub 40, would love to kind of continue to kind of build my position in that for the dividends that I'm receiving. Excuse me. So let's take a look at CrowdStrike. We haven't gone over CrowdStrike's earnings yet. And up over almost 12%. Quick take on the markets for everybody joining in. So QQQ's here down a little bit over 1.5%. SPY down 1.28, and the Dow is down over 1.23. So we did get that spike right on inflation numbers, and then we're right back down. Total CPI sits at 7.9%, so almost at 8% already, and the core is sitting at 6.4%. So Haas asking about inflation. So again, total CPI 7.9, core sits at 6.4. We were pretty much up in line with the estimates for CPI numbers. And again, energy prices being the big culprit and driving inflation higher. Gasoline, all types, fuel oil, energy, commodities, all that stuff was up 6%, 7% on a month-over-month basis. So big jump here. So CrowdStrike, all right, let's take a look at earnings here. So sees powerful tailwinds driving fiscal 2023 as full year sales. Let's take a look at the actual numbers. All right, so Q4 EPS revenue climbs and sets Q1 fiscal year 2023 guidance. So earnings per share came in at 30 cents. That's pretty high, 30 cents per share. Same time last year, it's about 100% increase year over year. Analysts were expecting 10 cents. That's about a 50% surprise. And revenue came in at 431 million versus 264 same time last year. That's another 85 to 90% increase on a year over year basis. And we got analysts were expecting 412 million. So that's also a big surprise for the company. Q1 EPS expected to be between 22 to 24 cents, revenue 458 to 465. And the consensus was 18 cents. So big beat on EPS and big beat on revenue guidance as well. And for the full year, the company expects EPS of $1.03 to $1.13 or revenue $2.13 to $2.16 billion. So wow, they pretty much very articulate, announcing all the numbers that investors look for. So if you look at the actual earnings per share on a forward basis, we'll take the mid guidance of $1.10. Stock price right now at $190. So we're looking at $190 divided by $1.10. About 172 times earnings. So 172 is going to be the PE ratio on a forward basis. And if you come back over here, take a look at the actual revenue, 2.13 to 2.16. We'll take the mid guidance at 2.15 billion. So 2150 is going to be that mid guidance. So 38.94 divided by 2.15. It's starting at over 18 times sales. So here you've got CrowdStrike, a super high growth company investing a lot into their business, into their top line revenues and bringing in more clients, more customers, more Fortune 500, Fortune 100 companies, trading at significant premium, right? 18 times sales and over 172 times forward earnings. If you are interested in that type of growth, then sure. I mean, it's a great quality stock. Still needs some improvement in terms of operating expenses, which are pretty high, spending a lot of money on SG&A, marketing and advertising and all that stuff. But if you are a little bit more on the conservative side, then you might be interested in 50, maybe 30, maybe 40 times price to earnings and about 10 times sales. If you are super conservative, like on the value investor side conservative, then you might be looking at about 18, maybe 16 times PE and about 6 to 7 times sales, and at that point, just better off not look at CrowdStrike altogether. Look at something else. But CrowdStrike right now is appealing to super high growth investors, right? And if you're willing to take that risk, by all means, that's completely fine. All right, so let's see. So when you look at EPS, company profitability, do you look at GAAP or non-GAAP? So I look at both pretty much. So when I go to Seeking Alpha, I look at both GAAP and non-GAAP. If there's something that stands out, if there's a big discrepancy, like if a GAAP EPS is much higher or lower than the non-GAAP EPS, then I would specifically go over to the income statement to look at what adjustments they made to kind of figure out their non-GAAP EPS, right? Because with non-GAAP, you can make a lot of adjustments. You can add back a lot of expenses as your profit, and as a result, your non-GAAP EPS should be much higher. Usually it is. Usually companies have a non-GAAP EPS which is much higher than their GAAP EPS because they make a lot of adjustments to arrive at that number. So most often, I will look at both and I would see if they're pretty much in line. That means there's not really much adjustments to be made. If there's a big discrepancy, then I will go back and look at the income statement, look at what adjustments the company is making. If they're adding back stock-based comp, if they're adding back certain line items which they don't expect to recur over the next several years, then I would just take a look at it and make my judgment based on that. But most oftentimes, I would just look at both. So, all right. So Ifian says, do you see yourself as a value investor or growth? That's a great question. I'm kind of like in the middle. I like to be conservative, right? So I obviously don't want to overpay for companies. So because everything trickles down to valuation, right? Everything does. It's with whether you're buying a house, whether you're buying a phone, whether you're buying a stock, whether you're buying a car, everything boils down to valuation, right? As humans, we never want to overpay for something, right? We never want to get ripped off wherever we're doing a buying, right? So whether it's a stock, whether it's anything. So valuation almost always matters. So that's always like in the back of my mind. That's something that I always pay close attention to, and how much I'm paying and how much value I'm getting for it, right? So price doesn't necessarily mean the value that you're getting, right? Price is completely different. Price is what the market's asking for it versus the value is what you're actually getting out of it. So, as I always mention, that you always want to pay 50 cents for $1, right? That's how much you want to pay. Like if I give you $1, your first question should be, will you accept 50 cents or will you accept 75 cents, right? That's when I know that you understand that you're trying to make a profit out of this transaction. So that is always going to be at the back of my mind. And then if stocks are trading at super high multiples, then I would personally just try to not look at them, basically pass up on them. Or if I am super interested, I believe in the mission, I believe in the qualitative aspects of it, then maybe to get a little skin in the game, I'll sell cash secured put, or I'll start like a very, very small position and then dollar cost average my way into it as I feel more and more confident as multiples come down. So there's nothing wrong with investing in super high, sort of like high multiple, high growth companies, but you just have to accept the fact that if you invest in high multiple companies, there's a higher risk. And you just have to be willing to accept that downside. If you are, then by all means, you can do that. But if you are not, then it's not for you, right? It's for a different stock. There's over 6,000, 7,000 stocks in the US, right? Plenty of stocks to choose from. So I would say like in some situations, I am definitely more towards growth because I believe in the story more. So, with Tesla, there's so much qualitative aspect that you can't ignore for the company that I believe that it has the potential to become, several $1 trillion worth in the future if they're able to fully execute their mission with FSD, with energy and all that stuff. So even with higher multiples, we've seen a big compression. I don't mind investing in sort of like that company because it's a higher growth play anyway, same with Amazon. But with other sides, I'm a little bit of a stickler because the qualitative analysis may not be there. It's not fully formed. Think about Palantir. Palantir, love the story, love the qualitative analysis, but not really confident with the numbers just yet. And as I get more confident, I will build out a bigger position. So you have to find your sweet spot. Again, there's no right or wrong answer with this one. Everybody has a different risk tolerance. Everyone's got a different strategy. So you just have to find the right balance and how much you're willing to pay for these companies, right? Every stock, and by the way, we had a call with Mark from Evercore, and he mentioned a concept called high quality dislocated companies, right? So that was your HQDs, which are great companies, but at a dislocated price. That's what you're looking for. And every company is going to go through phases of being undervalued and overvalued, right? Very few times are you going to find stocks fairly valued in the markets. Most of the times they're going to be either overvalued or undervalued. So again, kind of breaks down to what you're really interested in terms of your objectives and long-term goals. So, all right, let's just see. So, all right, Arnold says it's hard to know when to sell a loss. Palantir at 33, for example, I mean, it's hard to decide what I do with that. So that's a great question. And again, I think it all comes down to your conviction, right? So the more research you do, the more analysis you do for the company, you're less likely to second guess yourself if the stock price comes down, right? That's why it's so important for everyone to do their own due diligence on the company that they're investing in. And I know that this may sound like very cliche that, do your own due diligence. Of course, it's not financial investment advice. But the reason I generally mean that is because the more you know about the company, the less likely you're about to second guess yourself if stock prices come down, right? If you know the company in and out, every single thing, the management, the revenue, the future guidance, the growth, the balance sheet, if you know everything, there's nothing to be feared of if the markets come down or the stock prices sell off. If you know nothing about the company and the stock sells off, you are going to panic, right? That will happen. I've been there, right? I've been in situations where I know nothing about the company and I've invested and I'm down and I'm thinking to myself, shit, what am I supposed to do now? Like, should I sell? Should I buy? Should I dollar cost average down? But then that happens, right? So it's important to kind of understand why you bought the company and if it's still in line with your expectations. The only time you should be selling is when the fundamentals drastically change, right? If the fundamentals completely change, that's when you should really be considering sort of like any type of exiting that position or trimming that position. Two things: if your price target's achieved or the fundamentals change for the company. Those are the two sort of big lessons that I've learned in terms of exiting your positions. All right, so nobody knows anything about Palantir. In terms of software, yeah, I mean, nobody will tell you like in and out everything, but we can get a pretty good idea of what they're actually doing and how valuable it could be in the future, right? With data, just think of it this way. How much data are we creating every single day, right? You click a picture, that's data, right? You write something, you send an email, that's data, right? You just like click on something, that's data, right? We create so many data points every single day, and the world is only getting bigger and more data centric. So just think about how much Palantir is going to have appeal to businesses when they give them the opportunity to condense all that data, make sense of that data, right, in the future. In the short term, Wall Street cares about profits and earnings and revenue growth, which Palantir unfortunately does not have. But as I've said, this is a longer term play, 5 years out, 10 years out. And if the numbers do play out as I expect them to be, there's significant opportunity in my view. So, Caddy, what is your best dividend value stocks right now? So I shared a complete list of the dividend names. So again, Walgreens, Realty Income Corp, JP Morgan. Let's just go over the watch list here. So I'm really thinking about adding Verizon. Verizon is something that I'm actually researching on a little bit. Maybe I'll do a video very soon. I like Lockheed Martin, but ever since this sort of geopolitical tension and everything, it has rallied quite a bit, 45%, 50%. So really got away. So yield's obviously much lower now as the price has gone up. But Intel, I like. Intel is roughly 3% right now. 3M I'm thinking about very soon, so just over 4% right now. And AbbVie, if it comes down, I would definitely consider it. Right now, it's just also with Lockheed Martin, it's gone up too much. It's rallied over 41% with a 3.79% yield. So if it comes down, and then American Tower, somebody mentioned in our Discord, again, shout out to them. American Tower, they mentioned it's another REIT, which gives over 2.23%. This is all something I'm researching here, and we'll probably do a video on very soon. So just some examples: Chevron, Exxon, these are good energy companies with high dividends. But again, it really depends on what your future expectations are on energy. I mean, take a look at Chevron. Jeez. From September, this stock is up 83%. Insane. Absolutely incredible. All right, so time flies when we're having fun, right? It's only less than 8 minutes left for the markets to open. So we'll just open up our split screens and we'll open up these charts. So we'll take a look at So QQQ still down 1.5%. Dow Jones down 1.29. SPY is down 1.29. Yes, so Dustin, what is your opinion on Vail? Great dividend stocks as well. So Vail also I like, definitely very, very high dividend. The only thing is that it's a little bit too dependent on iron ore prices, right? So just yesterday, I mean, take a look at this. It's a really volatile stock. For me, for dividend stocks, I don't want to have like super volatile names. And with Vail, unfortunately, it's too dependent on commodity prices. So just yesterday, when commodity prices sold off, iron was down, nickel, palladium, aluminum, all those prices were down. Vail was down over 5.5%, 5.5% in one single day. So that's very volatile, and it's dependent on one single sort of commodity. That's why Exxon, Chevron, too dependent on energy, right? If oil prices are going higher, they do well. If oil prices are going down, they don't do so well. So it's kind of like dependent on one commodity. But if you're bullish on iron, Vail is one to look into. Of course, I know a couple of people that are super interested in Vail in our Discord. So, but a very, very strong yield of 14%. But just the volatility is incredible. From July, it dropped 50%, and then it rallied over 77%, right? So, very, very high beta stock. All right, so PayPal currently down close to 2%. We got Amazon still keeping up on some of those gains, 4.3%. We got Facebook down 1.66. We got AMD down over 2.2%. Nvidia down over 2.8%. And then we got Tesla down over 1.16%. Let's just take a look at the polls here. So I'm going to do the poll, and let me know what you guys think. Markets today, green, red, and flat. So, all right. Make sure that you vote so that we can get a good sentiment check and see where everybody sits in terms of the market's prediction today. And this is going to be our year-to-date chart. And once again, a big drop here in oil prices, energy prices, commodity prices, and what really pushed up is the yields and a lot of these other sectors. Remember, Wall Street is going to run its course with energy. It's not going to be forever. It's not going to be something that keeps going higher and higher and higher and higher. Sure, over the next 1 month, over the next 2 months, over the next couple of quarters, as we kind of battle through these geopolitical tensions, energy prices could go higher. As Europe looks for alternatives to Russian oil, could go higher, very much higher. But eventually, money will rotate back into these names, into these sectors that are down right here. Sectors like financials, utilities, staples, industrials, technology, healthcare, communication services, discretionary, those names that are still down year to date. So that's where I'm positioning myself in, right? Before Wall Street comes in and starts bidding this sector higher. But right now they're playing their game over here. That's where this is Wall Street right now. This is most of retail right now, I feel like. But of course, a lot of retailers are also in this sector. Not taking that away from them. Definitely they're playing oil as well, and they're bullish on oil. But this is really what the breakdown is. Wall Street likes to focus more on what's moving in the short term, where that next sort of opportunity is, because they don't really have a long-term outlook, right, in the markets. Most of them want to hedge their positions and be able to do well in the short term and kind of over the next year beat the market. All right, so here, where are we with the poll here? So 68% red. Wow. So 130 people have voted so far. But again, please make sure that you vote, because we've got over 500 people watching the stream. So make sure that you vote so we can get a good sentiment check here. And also make sure that you subscribe if you haven't already. Because I was looking at the analytics the other day. 35 to 40% of the people watch the videos, but they haven't subscribed yet. Come on. What do I got to do to earn your subscription? So subscribe. We are live Monday through Friday. At least we try to be if you're not lagging. But we cover the markets. We cover a lot of fundamental technical analysis, macroeconomics, a lot of individual companies, analysis on those. And of course, just a lot of talk on the stock market. So if you're into that stuff, definitely would love your subscription, and let me know what else you want me to cover. Like if there's any stocks you want me to go over, analyze them, I'm happy to do that as well. So yeah, make sure that you subscribe as well. All right, CPI came at 7.9%. Yep, so 7.9% was the CPI. Joe, yep, welcome on board. CPI is out. It was out at 8:30 a.m. Eastern, so about an hour ago. And yep, JD.com is revenue and tanking right now, so we covered that earlier. They are down over 6% right now. Much slower growth than previously anticipated, so it's kind of similar to what Baba had. So, all right, let's see. Love the content. Thank you so much. I really appreciate it. Timothy, thank you for giving me a shout out. I'm glad you enjoy everything that we do. Right now, the market seems to be spiking a little bit. So QQQ pushing higher slightly. 64% expecting to be red. So that's not a surprise because markets are gapping down. So it's pretty understandable that we are seeing a little bit of a red sentiment. So Tesla had a pretty decent spike here, back over $850. So did Nvidia. So did Advanced Micro Devices. Meta Platforms not so much, but PayPal also pushed up a little bit. So Coin might also be dropping here. Both Coin and Mara are probably going to be down because Bitcoin prices have been selling off here. So Ethereum down over 5.3, Bitcoin's down over 6.89, pretty much giving up on all the gains from yesterday. So yeah, Coinbase is down over 2%, and then Mara's also down a little bit over 6% right now. Let's see. It should improve. It should improve. If it's lagging, it should improve. Let's take a look at Alibaba. Wow, 5% down to $95. That is crazy. All right, so let me see if I can fix this on the go. All right, so the markets are open. Just gonna try to fix this here. Of course, it almost always happens right when the market opens. It's kind of weird, isn't it? It is really weird. As soon as the market opens, it starts lagging. So weird. Unbelievable. Put the sunglasses on for my subscribers. So if I put on the sunglasses, I don't even know if I have them anymore. I don't have them anymore. All right, as long as the screen's working well, that's all I really care about, and hopefully it improves. It'll improve soon. But it's weird how it almost always happens right when the market opens. It's such a coincidence every single time. Every time. Have you guys noticed this? Pre-market, it never happens, and then right at the open, always at this time. So weird. So strange.